I threw a snowball at Santa, but I didn't hit him. Batteries are very effective. Hey, that which brings me to Dave Portnoy is constantly talking to me about the batteries and Phil. Give me a break. We threw punches. That's what we were good at other fans because we're like the worst drunks in the world. Now, I know that you know crypto, and I follow Portnoy very closely, and I love what he says. He's always talking about the suits and how they don't know what they're talking about, and they discourage people, and that's very much how I like. He's not a teacher so much as he is a pundit. Now, he got all in. I can see. I got this house at the beach. Let me back up, and it's on the Shinnecock Canal. And right across from it are these Winklevi, the Winkle.
Winklevi.
Yeah, they made like $1 trillion on crypto. And I know that they follow, just like the president's son, everybody follows Portnoy. It's insane. And they have him going on the crypto, and Portnoy's making a fortune. That's what I understood. And then he leaves crypto. Now, you know crypto. What the hell happened?
So Dave, I think, and we'd have to ask him for sure, but my understanding is that in 2017, when Bitcoin
wait a second. We have to put words in Dave's mouth.
In 2017, Bitcoin was going up, from 1,000 to 20,000 that year. And there's a bunch of people at Barstool who started buying Bitcoin, and basically they were, talking shit to him, saying, "Hey, look, I'm making all this money, you idiot." And so he bought Bitcoin and then did this epic video that's now famous of, he's like, "I just bought Bitcoin. I don't know what Bitcoin is, but I'm not going to sit around while everyone else gets rich and I don't get rich. If everyone else is getting rich on Bitcoin, I'm getting rich on Bitcoin." So he goes on this whole thing. Obviously, Bitcoin crashes. A bunch of people lose money. And he doesn't really talk about it for a number of years. And then just recently, when he started getting into all the stocks and everything, the one thing that crypto is really good at is there's a bunch of people on the internet who've got memes and GIFs and tweets, and they're ready to rock and roll. And so they've been chirping at him nonstop to stop playing around with stocks and go buy crypto. So eventually he got the Winklevi to come. They tried to explain to him, here's what Bitcoin is, whatever.
What happened. That's what happened.
Here's the best part is he put some money into crypto. And, one of the things I like about Dave is that when he does something, he doesn't just kind of dip his toe in. He jumps all in, basically naked right off of the cliff and put, if my understanding is a couple $100,000, if not a couple $1 million in. And it's super volatile. So it goes up, 8-10%. Green hammers out. He's ready to rock and roll. He loves crypto. Well, when it goes down 8 or 10%, he says, "Hey, stocks only go up, crypto goes down. I'm out of crypto. I'm going back to play with stocks."
Okay, so let's say that he actually wanted to do it in a serious fashion. What would he need to know before he did buy?
Yeah, here's the whole pitch. I think right now is if you look at Bitcoin specifically, the two things that are important to understand is the macro environment. There's no better asset in the world than Bitcoin in terms of you've got interest rates manipulated down to zero. You've got trillions of dollars being printed, which creates a fear of inflation, whether it ever happens or not. Retail is going to rush for inflation hedge assets. Inflation hedge assets can include everything from real estate, precious metals, Bitcoin, etc. And Bitcoin structurally, it's the smallest market cap, it's got the most volatility, is likely to go up the most in value when people fear inflation, right? So if you look at like a Paul Tudor Jones, when he comes out and he says, "Look, inflation hedge assets are going to do great in this macro environment. It's just Bitcoin's going to be the fastest horse." Right. So they'll all do well. Just Bitcoin's going to be the most volatile. So when it goes down, that means Bitcoin draws down the most. But when all these assets go up, Bitcoin goes up the most.
Let me give you the thing. There's a stock called Barrick. Okay.
Yep.
The symbol is gold. I like that because it's easy. Portnoy must like that. He said, "I want to buy gold." He goes buy gold. And I think gold is remarkable. And this company has an incredibly low cost. Gold they make about $700 per ounce. Does gold complement crypto, or does crypto make it so you don't need gold?
So the way I think about, take like a gold bug and a Bitcoiner, you put them side by side.
Yeah.
They agree almost to the T on all of the structural problems, the macro environment, all those issues. They agree on the theoretical solution, which is sound money principles.
Right.
What they disagree on is the application of the sound money principles. So you can do that through a digital means, which is Bitcoin, right? Or you can do that through more of an analog means, which is gold. What most Bitcoiners would argue is if you put gold and Bitcoin next to each other from a utility standpoint, Bitcoin is more efficient, it's more divisible, it's more portable, it's got kind of all these advantages, right? And there's an entire generation of people kind of 35 and under, 40 and under, whatever, they're choosing Bitcoin because it is a digitally native asset versus gold, which is kind of the boomer sound money principal asset.
Well,
Now,
that's interesting.
they're both gonna do well. They're both gonna do well. It's just which one's gonna go up more.
You're exactly right. I see the fluidity of gold and gold stocks and the GLT. I tell people if they can, and this is where I think that you got the edge on me, go buy bullion, put it in a safety deposit box, which you have to pay for. Give keys to your kids, and remember that you can take bullion if you have to, or gold coins, to the next place you have to go. But there's a big vig for gold coins, costs a lot, and the bullion's heavy and very bulky, and you can't just walk around with it. So yes, you're right. My curiosity about crypto is, if I had this, if I were more secure in it, I would say, okay, look, younger people, you may not like the analog. You maybe feel more comfortable with the digital. I totally understand. People want to buy, people want to dig a hole in the backyard and put gold. Well, forget it. I mean, the guys who cut your lawn got find it. So I feel very strongly that I have missed crypto. I haven't missed gold. I had my father buy a lot of gold. You go overseas, you can put your gold in. In 1933, the government confiscated all the gold that people, and that was for FDR. How do I know? I read these stories, about someone forgets the code or they lose it, and then I start thinking, well, that's too scary for me. Was that just a phony incident? And also, can the cyber attackers, like I like Zscaler, I like CrowdStrike, I like Palo Alto, and they always tell me that people are hacking crypto, or also they tell me that you got to pay ransomware in crypto. So therefore, you better find out about crypto. So obviously, it has more uses, but give me a security story.
Yeah. So if you think of gold, right, you can own gold, everything from own Barrick Gold, which is a company that's in that business. You can own gold that somebody else holds for you, right? You can go own the physical gold and put it in your house, or you can own gold and put it in a safety deposit box and have kind of the most extreme, severe security setup in the world, right? Same thing with Bitcoin, in the sense of there's many different ways to get exposure, right? So you can go today and you can simply use GBTC, right, with Grayscale Bitcoin Trust, and you can get exposure to the actual underlying asset, right? You can actually buy Bitcoin and you can hold it in a custody provider. So there's everything from BlockFi, Coinbase, Kraken, Gemini. All these guys have kind of institutional grade custody providers. Then you can actually buy Bitcoin and you can take possession of it yourself. Most Bitcoiners are going to argue that you should take possession yourself. They like the self-sovereignty, they like the security, all that kind of stuff.
Wait, what is it in here?
Yeah, well, so you can have a hardware device, you can hold it on a wallet on your phone. There's a whole spectrum of ways to own it. What I always tell people is, if you know yourself and you say, there's no way that I know anything technical, you can just go buy and get exposure in a stock ticker, right? You can just buy GBTC. If you say, hey, you know what, I want to go kind of level 2, I can buy actual Bitcoin on one of these exchanges and put it into an institutional grade custody provider.
So GBTC is like GLD?
Exactly, for Bitcoin.
Really? And it's $11?
It's $11. There's a premium.
Why wouldn't people do that? Is there a VIG there?
There's a premium, and it can get kind of nasty at certain times. Like in the really, really obviously frothy times with Bitcoin, it can go up. But again, if that's the exposure you want, right, then you can just do it there. So it's kind of a spectrum of control. But I think the bigger thing here, when you compare Bitcoin and gold, you'll like this, I think, which is, with gold, if I said to you, how much gold is in the circulating supply, you'll give me kind of a really close.
That's close to 1% every year. So it's incredibly healthy. The shortage of gold right now is extraordinary.
Yeah, you'll tell me a pretty close estimate of what the circulating supply is. Sure. You'll tell me a pretty close estimate to the incoming daily supply. Yeah. I think part of what the younger generation is realizing with Bitcoin is everything is provably scarce. So one of the big differences between gold and Bitcoin is, right now, there's some guy somewhere who's digging through his field. All of a sudden, he finds a gold deposit, right? It's not going to move the market materially, but it increases the gold supply, right? And nobody knows, and there's a latency of information, all that kind of stuff. With Bitcoin, everything is provable on chain. So I know every single day, and I can prove to you that 900 Bitcoin are getting created each day. Then I can prove to you on chain exactly 18,460,000 Bitcoin exists in circulating supply. And so it's this weird world of like, I know that gold is scarce. I just don't know, like, to the T how many ounces exist, right?
Nobody knows.
And having that provability, I think that the younger generation, just because they're digitally native, say, hey, that's really attractive. I can actually point to an exact number and audit it myself because it's transparent.
Well, but what happened to all the mining? I mean, Nvidia, which is a stock I love, they were making cards that people were used for mining. It seems like that business went away.
So there's two different types of ways to mine, right? So if you've got Bitcoin, they're using ASIC miners. So think of these as specialized computers.
I know.
All right. So just for Bitcoin mining, there's also a bunch of people who are using the kind of graphics cards that you would use for gaming or other types of things.
That's NVIDIA.
Yep. But they're not mining Bitcoin. They're actually mining Ethereum and a bunch of other tokens.
Or are they jackasses?
No, I mean, look, it's think of mining as just a data center business. But the difference between mining and a data center business, right, is the data center business, you got to have a sales force and you got to go out and find customers. With mining, you have a 100% persistent customer demand for 100% of your computing power. Because all you're doing is you're renting your computing power to an algorithm, and that algorithm is paying you 100% 24/7. You don't need a sales force. So the unit economics on mining compared to a traditional data center is much more attractive.
So then what happened? Why? I mean, my stepson one day came to me and said, listen, I want to mine. Oh, okay. So that was when it was at 19,000. So
exactly.
Like everybody was a miner. Okay. So let me ask you this. Let me ask you a theoretical question.
All right.
If I were coming out of college, no. If I were 32, 35 and had started to make money, and felt like my principle, which is that you need 10% of your assets in gold. I've been a gold bug all my life. Do you think that I wouldn't even be thinking about gold and I would just be thinking I need 10% of my assets in a great hedge against inflation? So I need to be in crypto, and that gold would be something that actually didn't compute, because who wants to hide something in some place and pay for a deposit box? It's really an inefficient way to fight inflation.
Yeah, I think the first key, and we talked about the financial education, is people are waking up to just, hey, I should have an inflation hedge asset in my portfolio, right?
Absolutely.
There's a bucket there. I got to have it. The way that I talk about it is each individual person, so age, income level, goals, all the optimizations are really hard to kind of give, one size fits all advice, right? Obviously. What I do know is the zero exposure to Bitcoin is the wrong answer. So I don't know if it's 1%, 5%, 10%, right? Each person's different, but getting off 0% is really, really important, because what it does is gold and Bitcoin, while they both serve as inflation hedge assets, Bitcoin has a very, very different return profile, meaning that it's much more asymmetric. So right now, if you look earlier this year, right, remember the volatility works both directions. So when equities drew down 30% in March, gold was down 12 to 15%. Bitcoin drew down on one day 50%. I mean, it's just nasty, to rip your face off, right?
Yeah, dude.
Now, when we go the other direction and asset prices increase, Bitcoin's the best performing asset. So Bitcoin's up like 45% year to date, right? Gold's up about, I think it's 15 to 20%. Right. Equities are, flat to kind of single digit positive in some of the indexes. And so what you start to realize is, if asset prices are going to go up and the Fed's going to continue to just inject trillions of dollars of liquidity and kind of all this macro stuff happens, you just want to have exposure to the most asymmetric asset, right? So I don't think Bitcoin will ever go to zero. So your downside may be, again, 20, 30, 40, 50%, whatever it is. Okay. But your upside is hundreds of percent, if not thousands of percent. That brings me to, here's the most important thing you got to know about Bitcoin: the halving. So no one's explained this yet. There's something called the Bitcoin halving. Right. And I'm going to tell you why this is important. I publicly in December of 2018 came out and I issued $1 million. My partners and I issued $1 million challenge to any manager on Wall Street. They could pick any asset, any individual stock, any asset for a decade. Bitcoin will outperform it. $1 million goes to charity. Knock yourself out. Not one person took it. Here's why. Because the Bitcoin halving is a programmatic decrease in the incoming supply. So imagine if in 2008, when gold went down 30%, the government steps in, they printed a bunch of money, everyone ran to gold. It went up 200%, hits an all-time high in 2011. Imagine when everyone ran to gold, if 50% of the incoming supply of gold got taken out of the market. So 50% of the miners just shut down. Of course, the price would explode, right? That's what happened with Bitcoin. So in March, liquidity crisis occurs. Government steps in, starts printing money. Everyone runs for inflation hedge assets, Bitcoin being one of a bunch. In early May, there was a drop from each day 1,800 Bitcoin being created to now each day there's only 900 being created. And that happens every 4 years. So that'll go on for 4 years, 900 a day get created, and then it'll get dropped to 450 after that 4-year period. So programmatically, what you see is you're actually making the asset more and more scarce over time. But it just so happens that this last one occurred at the exact macro environment where everyone's rushing for inflation hedge assets. And so I actually think Bitcoin's price is going to top $100,000 by the end of next year.
See, I have to tell you, I'm not going to disagree with that. And the reason why I've been focused on it, I'm glad you give me the education on it. Stan Druckenmiller is a friend of mine, and he's a great investor, though he is a Steeler fan, which then causes complications. Although I have Juju, Simon and Schuster there. I always call him Simon Schuster, like the book company. But here's the problem. He said yesterday that in 3 to 5 years, we're all going to have to pay for what the government did. And my friend Joe Kernan asked me that, and I said, I have been so possessed by that because I know that we're going to get hurt. So when I go to my inflation handbook, what it says is buy gold, buy masterpieces, and buy mansions. Those are the 3 things that's it in my age. Okay. Those are the 3 things you had to do. Now my wife's in real estate, so we've gone with the real estate as our hedge. All right. What we didn't have in that menu was crypto. And I think that you have to have, I'm going to still say gold or crypto because I have so much gold, but you have to have one or the other. And I like what you're saying about crypto. I'm not in crypto. Remember, I'm not in gold for the appreciation. I'm in gold for the alternative. But I don't know how my kids are going to pay down what happened. I think we had to do it to avoid a depression, so I'm glad we did it. But I see the dollar going down. And most importantly, I know that no one wants to raise taxes in this country. And even if we did raise taxes, we still can't afford it. We're not cutting Social Security. We're not cutting Medicare. We're on a collision course which makes me feel great about the gold I own. But I do feel that it's perfectly logical to add crypto to the menu. And now after speaking to you, I think that my kids, when they get my inheritance, won't feel comfortable with gold and will feel comfortable with crypto. And I don't want them, I try to put everything I own on one piece of paper. They won't understand the deposit box at, say, Toronto Dominion, okay? But they would understand crypto. And I have to start recognizing that maybe I am using a typewriter.
Well, here's what I'll tell you is if you take 10% of your gold position, right? So just whatever you have allocated for your inflation hedge bucket, if you take 10% of that bucket, so let's say you have 10% in gold, you just take 1% of your portfolio, right? 10% of your gold.
I have.
Okay, so take 1%, you put it in Bitcoin. That 1% of Bitcoin will outperform the 9% of gold over the next 18 months. Hands down, not even close.
And you want me to actually do let my kids set up the Bitcoin for me?
Yeah, they'll do it, or I'll help you do it. Whoever will help you do it. It's super simple. And what you end up doing is you would end up owning 1% Bitcoin, right, in your portfolio. If it goes to 0, you lost 1%. Not the end of the day, right? Not happy, but not the end of the day.
No, but that's okay. I have stuff in it. I have an international fund that's done terribly until now. And I just said, look, I can't have all my eggs in U.S. basket. I want to have, like I said, I lost the masterpieces to my ex-wife. God love her, some beautiful paintings. And they're Toulouse-Lautrec. They're not going to. But then I have I have the gold. I have the so-called mansion, the real estate equation. Okay. And what I do is and I'm not a paid spokesman for why I need gold or why I need crypto, but I just need something that my kids will understand as a hedge to inflation, and they will never understand gold. And the reason why they'll never understand gold is they think gold's dangerous. It's dangerous because it can be stolen. It's dangerous because they don't want to take it out of the bank. It's dangerous because they may forget where it is. Okay. I mean, let's say people talk about like, well, crypto gets hacked or whatever. You know what's really bad is when your kids can't find your gold. And that is, by the way, not unusual. So this is why I am fixated on needing to own crypto because I fear massive amount of inflation and I don't have, gold will do okay. and the houses will do okay. Those are going to keep me running in place as opposed to falling off a cliff. The idea of actually making money, well, holy cow, I'd take a shot at that with 1%.
Think about this. So one thing is important, right? Is when you talk to your kids about it, you got to make sure it's Bitcoin, not just crypto in general, right? Because Bitcoin specifically has the inflation hedge things that we're talking about here. The other ones, advantages, disadvantages, but Bitcoin specifically is this kind of inflation hedge type asset. The thing that I would say is that people forget when they hear this, though, it becomes very attractive. 60-40 global portfolio over the last 5 years or so, about 7.2% return, right? Annually.
Right.
If you had taken 1% of your assets and put it in Bitcoin, even with all the crazy ups and downs, everything, you would have taken that 7.2% and gone to 9.2. So it added 200 basis points of performance annually, right? If that 1% had gone to zero, you'd gone from 7.2 to 7%. So 20 basis point downside, 200 basis point upside. So it's literally 10 to 1 in terms of risk reward, right?
Right.
The key is the standard deviation of risk stays about the same, and the sharp ratio goes up over 20%.
Really?
Because it's a non-correlated asset over long periods of time.
Now, non-correlated asset. You're so right. Now, let me ask you a very obvious question for you, but not for me.
Okay.
Will my kids understand where it's kept? I mean, is it an app?
So the way to think about this is wherever you buy stocks, the way that your kids are going to get access to that is either through a will, or you're going to have to tell them the username, password, all that kind of stuff, right? Same thing here. So if you don't self-custody it, meaning that you actually take physical possession, sovereign possession, what you would have to do is, let's say that you use Gemini, the Winklevoss's thing, right? You can go on, set up an account, got a username and a password, you buy Bitcoin, you can hold it in have a custody solution, right? And then you just got to make sure that your kids or whoever oversees the will or whatever knows how to get access to that account, right?
Now,
so it's the exact same thing.
I'm thinking about this is I have trust for my kids, and they're laddered. When they turn 30, by the time they're 29, 26. And I have stock for them, index funds, because not on individual stocks. And I am thinking that when they turn 35 and turn 40, I hope I'm there, but you never know, right? I would love to have right now some Bitcoin in there, but I'm worried what they'll do is they'll read the will. So I'm like, where's the Bitcoin? What his dad did? What did he do? He managed something like high and dry. I don't have the code. I just lost it. Someone hacked it. I want them to feel comfortable when they turn 35 and 40 that I didn't buy them something that doesn't exist.
Yep. Exact same thing. I mean, look, as long as you've got in an account where you want to pass it on, you just got to have them have the information on how to get in the account.
Now, when Square tells me that they'll handle trades, can you keep it at Square, or you really want to use like the Gemini?
You can keep it on any of these exchanges. One of the things that you're just doing, right, just like any other kind of financial institution, is you're just offloading some of the risk to that financial institution. So you've got to underwrite their security, their solvency, all that kind of stuff. The key piece is the Bitcoin ethos, right? The hardcore Bitcoiner is all about self-sovereignty. So just like you say, hey, go get the gold and put it in your backyard, or put it in a safety deposit box, whatever. Bitcoiners have the same ethos. One of the challenges for people who are older or not as technical is that there's a somewhat technical process to take physical control of a digital asset, right? And so what I always tell people is like, get started by getting off 0% exposure. So get to 1%.
Right.
Hold it in one of these kind of well-known large custody providers to start. Then
you mentioned that Gemini. I know you don't take any money. Yeah. Gemini is the one that they're in. The
Winklevoss twins. That's their exchange, right? So
I don't want to make fun of. They're actually great guys. They belong to a club that I belong to, and they're incredibly kind and upstanding. And I see them. I don't want to be making fun of them. But
if you tell them that we talked and you're going to buy Bitcoin, they'll be your best friend.
Hey, they like my wife. She's the head of the entertainment committee at the club we belong to. And I need to do this for my kids. I need to do it because they are much more at risk than I am because of what happened. Let's say before this, okay, before February, before the pandemic. Well, I would have said, you know what, the stocks are doing well. I feel they're a good hedge against inflation. There's no inflation. But then everything broke down. And now I know I'm being reckless. See, I was being prudent with cash, okay? That's what I thought. Because you have stock, you have cash. That's great for your kids. Remember, the 29, 26. After what happened during this period, it's not right. I know now I went from being prudent to being reckless. So do I have to go buy them paintings? Again, very hard and subjective, okay? Real estate, again, taken care of. I've taken care of that asset. But I think that they will be, by the time they're 35 and 40, much more comfortable owning not the gold that they have, but the Bitcoin that they have, because they're digital and I am analog. I love that. It's, and look, I have no regrets. That's who I am. And I've loved gold. And there's a lot of people who hated gold. The whole time I've loved it. And I've loved it for exactly what you've been talking, scarcity value. I like the touch of it. But this touch of it is no longer as valuable as the scarce. That's the one that I like. And as long as you're telling me that, Jim, this is something that you can put and you can tell your kids, they will not be baffled by it. They will not be scared. That's really important, because I was concerned that they would be.
They're going to understand it better than you will, just because they're digitally native, right? Which is crazy. Here's the best part about Bitcoin, right? And this is why Portnoy loves crypto in general so much, is because not only is the asset great, but the community. They are the best memes and GIFs and tweets, etc. on the internet.
My kids thinks.
Of course.
That's how they think.
So
I have a daughter who just does, her whole rap is to do incredible Instagram, and she takes photos of food. I have another daughter who is just loves the meme of me going like this. I mean, they all understand. And when I tell them about, look, there's this deposit box at this bank, and they're like, Dad, what 2 keys like in the movies, and what? And do I have to go and everyone will see me in that room. And when they know that I walked out of it, they'll know that I have it. And, gold coins, when you tell me that you're buying $1 gold coin for $52, I don't get that at all, because I did that too. I bought gold coins, and I know it's just incredibly inefficient. And I'm possessed by this, which is why I, tell them, listen, you can go buy a gold fund, a junior gold fund, allowed to do that. But I know that I'm being reckless now. I know that when I saw that we got to talk, I talked with my wife about this. I said, look, I got to breach this thing that I'm not comfortable with. I'm just not. And she goes, well, is that really good and prudent money management? Why don't you educate yourself? And I said, well, look, I'm going to ask this guy, Pop. I mean, I was going to go to Portnoy. I was, because I said, okay, he's in there. I got to figure this out. And then he turned on them, and and I'm thinking about 7 years, 7 years, 15 years, and 20 years. Mm-hmm. And I know that I am, if I just had that cash in there and some gold, that they may look back and say, what was my father thinking? Why didn't he know about this? He was supposed to be such a savvy guy. And I think the answer is because I'm scared. But, I like this idea that the community is behind you. I like the fact that this Gemini is somebody you trust. And I have to do my work, obviously, and the others. You know what, of course, would be the easiest is like if JP Morgan, which I have, I just told JP Morgan, listen, I want to buy some Bitcoin, but they won't do it.
So JP Morgan hasn't done it yet. I'm sure they will at some point. But Fidelity has
I have money with Fidelity.
All right. So Fidelity has a very big digital asset business. And one of the things that they're doing is basically helping a bunch of their clients get into Bitcoin, right? So whether
they can help me?
I think so. Yeah. They can
I have most of my money at Fidelity.
Oh, then there you go. Yeah, they can absolutely help. When we get done, I'll introduce you to somebody over there who can help you do it.
Oh, that would be great. I mean, we got a little sidetracked here, but the reason I want to stay with this education idea is that's what I'm about. I'm a faux educator if I don't know Bitcoin. For a long time, when people say, well, how about Bitcoin? I say, well, look, I don't trade coffee, and I don't trade cotton, and I don't trade Bitcoin. And that sufficed for a very long time. It worked until the $3 trillion package, because we don't have that. We don't have $3 trillion in this country. And you can make the rich pay as much as you want. This is the first time in my life, and I've said it publicly, that I know we don't have the money. And that's one of the reasons why I like gold so much. But like you said, how about upside? I don't understand. Look, when you buy insurance on a car, you don't expect, like you have insurance on a Toyota and then you get paid for Lamborghini. It doesn't work like that. You get paid for the Toyota and you're thrilled. You're thrilled. I would love it if I put insurance on the Toyota and I got the Lamborghini with a little bit of downside. Maybe I don't get as nice a Toyota. And so this is what I've been, and it's literally what I said this morning on Squawk on the Street, which is that I know it ends badly. Not the stock. I can tell you that I'll find you the next NVIDIA, whatever. My kids can't own. They do. I mean, they later on they can do stock, but I can find the NVIDIA, but I can't find the cash. And the cash is what I'm most worried about because I know that cash is something that will be looked at as laziness and will be looked at as I didn't pay attention to my kids.
The best thing that you're going to see, and you've probably seen this chart before, is if you go back to 1971 and you take the U.S. stock market denominated in dollars, it's like a perfect lineup at 45-degree angle to the right? It just looks like great compounding growth.
Yes.
If you denominate the same exact stock market in gold, it's down. Right? So the stock market's down denominated in gold. It's just that the dollar's being devalued, which again, that is what is happening. And the bottom 50% that are uneducated about this stuff, right? They're the ones who get hurt the most because they live paycheck to paycheck. They just have cash sitting in their accounts, all this stuff. But for those that can educate themselves, you got to get into these inflation hedge assets, right? Yeah. And so gold is going to be just fine. Like it's not gold's going to do bad. It's just that Bitcoin is going to be way more volatile and over very long periods of time. I think don't quote me on this, but if I remember correctly, Bitcoin's compounded annual growth rate is over 35%.
Okay.
Right. So it just continues to be volatile, but you need volatility to go up. Right.
Would you do this? Here's why I own stocks. I tell people like this point, I said, look, I don't really trust the market, but if you really got to get in, let's use a very good example. You really got to get in. I like Nike. Okay. Mm-hmm. And Nike at the moment was at 118 and then it fell to 115. It was at an all-time high at 118 today. Now it's 115. And I would tell people, okay, this is it. Let's say you want to buy 200 shares of Nike. Buy 50. Now people want to go all in. They want to buy all. I want to get started in crypto by buying the equivalent of 50 Nike. Okay. Mm-hmm. So the person I deal with, the first thing I'm going to say is, do I need to be insured? Do I need to have, I can buy insurance when I say insurance, what I mean is that it won't vanish.
Yep.
Because that's one of the reasons why I'm afraid to recommend it. So I keep thinking it's going to vanish.
So here's, if you're really, really worried and it scares the hell out, and you're the most conservative person in the world, you can literally go buy GBTC. Now, GBTC is that ticker that just has the Bitcoin exposure. There's some premium to it, right? What I would tell people is if you're an accredited investor, you can actually go and participate in the private placement of GBTC. So you can go to Grayscale and say, hey, I don't want to buy the stock publicly. I want to invest in the private placement. You got to hold it for 6 months illiquid, right? But at the end of 6 months, you still have the same price risk of Bitcoin, but now you capture the premium rather than pay for the premium.
Oh, okay.
So there's a little bit of premium arbitrage.
Just owning it outright is for...
Owning it outright, I think, is the best thing to do.
Yes,
right?
I think that if I'm going to go in, here's what I'm thinking. I immediately get comfort with that Grace. Why do I get comfort? It's a stock.
Stock, of course.
But I know that if you really want to own gold, you buy gold bullion. So I figure if I want to own Bitcoin, I should go buy Bitcoin. I mean, to me, the analog works.
Yeah, it does. And the other thing you were talking about was basically dollar cost averaging. So here's a crazy stat for you, which is in December of 2017, Bitcoin hit $20,000.
Right.
It fell from 18 until today. It's now around $11,000, let's call it. But if you dollar cost averaged every single month the same amount of money from the high all the way till today, you would be up double-digit percentages on your investment.
Okay, well, that's how I do things. I mean, I tend to either do it when I was used to be able to be more active. I would do it every month. I'd invest every month. And then if the market fell between 10 and 15, I would double up that month, okay? That's the plan I would have for Bitcoin. Now, I always am afraid that the broker will say, oh, my God, here comes Cramer again. Every single month he's doing it. But you know what? I shouldn't worry about that, right? I mean, I shouldn't let that deter me from buying a smaller amount to get started because I'm not going to use the word I'm afraid. I want to use the word that I want to get my feet wet.
Yep. I think that's perfectly fair. And the whole thing here, right, is as you know, if you want to educate yourself, the best thing to do is put skin in the game because you'll start paying attention.
I always tell people, look, before you, I want you to do paper portfolio, but we've already passed that phase because I watch this. But I tell people, look, I don't want you, let's say you like Tesla, okay? All right, buy 10 shares of Tesla. They say, no, I got to be big. No, I need you to feel like if it goes down, you can buy more, not if it goes down, I have to sell. And that is something, that's the buy high, sell low. For this, what would I have? Let's say today when I have a conversation and let's use $10,000. Okay, let's just pick that. So I say I want to buy $10,000 worth of Bitcoin.
Yeah, you could go do that.
Really?
Of course.
You say, listen, I want to journal the 10,000 from my cash account to Bitcoin.
Of course. You basically, you just got to determine, do you want to buy it through Fidelity? Do you want to buy it on one of these exchanges? Whatever, wherever you want to normally buy it. It's the same thing.
Fidelity, because that's where my assets are, so my kids understand. Now, look, I apologize for my lack of knowledge, but let me just tell you.
You're doing a great job.
Well, I got to be, I got to play with an open hand. The fact that I've been a gold bug all my life has made me feel very comfortable as someone who likes alternative assets. Okay. Mm-hmm. The fact that my wife did the real estate part of her portfolio is, again, that's the inflation hedge. When I saw that you wanted to talk with me, I said to myself, okay, why don't I just be naked about it and just say, I don't know. In the same way that I went to the Apple store the first time I bought the app, I went in, there was this fabulous guy at the Short Hills Mall. I said, listen, I don't know anything about Apple. Show me everything. And he said, what do you know? I said, no, I don't know anything. And there was a guy next to me, there was a kid next to me. He's like, oh my God, what an idiot this guy is. I'm not afraid of being an idiot. The only way to start, if you're an idiot, is small, and then you get educated and you become a rookie, and then you become, second and third year. Because I am convinced that my kids will think that I'm negligent. There was actually a little dispute between one of my kids. Said, listen, for some inheritance that my dad left, I was very nervous because of the president, candidly, because I think he's a little erratic. We may disagree on that, but we disagree. Wow, he's a little erratic. So I did not put as much money that my father would have liked into the kid's account as stock for mutual funds. And I now feel I got a chance for Bitcoin because I'm not buying it at 20,000.
Of course. Look, it's a thing where if I'm right, in the macro environment serves as the tailwind. And if I'm right that supply and demand economics are going to remain valid, meaning that Bitcoin halving is going to have a supply shock, right? And as demand increases, price has to go up, then Bitcoin is likely to be the best performing asset in people's portfolio. It's only a $200 billion asset, right? So it's so small in the global financial system that, of course, if $1 billion of capital inflow to Bitcoin versus gold versus equities, you're going to get way more movement on Bitcoin because it's a smaller asset class, right? And so I think that's a key piece of this is it feels like everyone's been talking about Bitcoin for years, but it's still pretty small. Like the world hasn't started to really kind of move assets there. I think that this macro environment, I joke and say the Federal Reserve ran a $3 trillion marketing campaign for Bitcoin, right? And so it's like people are starting to pay attention.
Again, before what happened, before the pandemic, I would have had a nice conversation. Oh, that Bitcoin's kind of interesting. Yeah, it's not for me. I think that what really changed my mind was my daughter, my 26-year-old, saying, "Hey, Dad, how are we going to pay for $3 trillion?" But it was one of those questions. It wasn't like, "How are we going to pay for $3 trillion?" It was like, "No, Dad, how are we going to pay?" And I looked at her and I said, "Well, we're going to have to raise taxes." She goes, "But Dad, what are you going to? There's not enough money if you raise taxes. So what happens?" And I said, "Well, we don't know what happens." And she goes, "But Dad, you're the guy." And I said, I'm not the guy. I have an idea, which is not a good idea about what will happen, which is bad. And she said, "Well, what can I do?" And that's when I said, "Listen, we're going to get you a house, get you some gold." And I did. I got it a beach house. All these are designed for what I regard. It's not going to be apocalypse. It's just going to be not good.
Yeah.
And I want to hedge against not good. I expect that there's going to be global warming. And I expect that if I bought a house right on the beach, it's bad. So we bought the house, 5 houses in, okay? That was the hedge against, it's Ocean Grove, it's nice. That was the hedge against what's going to happen. But that's an illiquid asset that has, I think, a residential risk, particularly if things get ugly. Okay. Which I think is a perfectly reasonable. Before I wouldn't have said, I said, what are you crazy? I mean, the march of progress, but progress stopped. And this is a very serious issue that the 3 trillion. So I got to take action, and I'm going to take action after this video.